Welcome back, ladies and gentlemen, Allincrypto here, and today I want to spend this daily market update talking to you guys about our macro overview for the markets. In order for the cryptocurrency space to flourish, I believe it has to be a generally good environment for assets, and we're going to show you that we believe that is going to be the case moving forwards through the lens of the US stock market. I want to start things off with the TQQQ, which is the NASDAQ 3X Leverage Pro Shares ETF. And overlaid on it, we have the total cryptocurrency market cap. And you can see how these move very much in lockstep. Now, that is testimony to what I kind of prefaced this with, and that is that, and to actually be the beta that it is to traditional markets, it needs to be a generally good environment for markets. And I think we can use the US stock markets to gauge how the cryptocurrency markets may perform. Remember, it's going to overperform to both the up and the downside, the traditional financial markets. That's certainly been the case, and I expect it to continue to be so. So if we're bullish on markets broadly, we can drive a bullish narrative for the cryptocurrency space. And I believe, a good handle, certainly technically and fundamentally, on what I think is coming for US markets. I do see a good time ahead, and I'm going to explain to you why that is in this video, and that gives you a really bullish narrative for the crypto space, which you can also compound with all the things that we're looking at technically for crypto and, of course, fundamentally. So you can see here, I wanted to start with this, the TQQQ, which is a 3X leverage NASDAQ ETF, very much moves in lockstep with the total cryptocurrency market as they are tied to one another. Let's dive over to the S&P. We're not going to boast about all the targets, all the technical targets that we got very right for the S&P. What I want to do is wipe the face of the chart and actually talk to you guys about how I believe the Trump tariff pullback was the bear market. And actually, after a bear market, you get a bull market. I believe that's what we're in, and I think it's set to continue. So a technical bear market is defined by a 20% pullback. And this pullback that took place on the back end of all the uncertainty that was introduced by Trump's tariffs was to the magnitude of 21%. That makes it a bear market. And after a bear market, typically follows a bull market. We've certainly seen that. We've seen one of the strongest recoveries for markets during this period of downside. There was pretty bad economic data. We can get that from the revised job reports. They've taken 911,000 jobs out of the economy. The last time they did this was in 2009. The revisions took place, obviously looking at the period of 2008. And following that, markets did rather well. From the bottom of the barrel, often the only way is up. Also, we have had really max uncertainty in markets. If you look at a number of indexes, that would accompany or fit the narrative of us having a bear market. We've had that data. Markets are forward-looking, and we look towards the future. And we think the future is a bright one for assets. Certainly crypto, my opinion is going to be one of the best performing asset classes that there is. So technically we have had, I do apologize there, guys, a bear market, and we've entirely retraced the move to the downside, the bear market, and now gone on to start putting in higher highs. Every time we have done this, going all the way back to the 1980s, so you've had a 20% plus pullback and retraced it, the markets have rallied for a period of minimum a year plus. I think a similar thing is ahead of us today. In fact, if we were to rally from a year plus from when we engulfed the pullback, so just to show you on a bit of a more immediate time frame from here onwards, that would take us into July next year. I think markets have at least that long to run. I actually think they're going to run significantly longer. So I think we've had our bear market for the S&P 500, and the S&P 500 we're using as a barometer for markets more broadly. And ultimately we have upside ahead of us. That certainly has historically been the case. Now, the significance of all of this as Allincrypto, a crypto channel, is that crypto is going to perform well in an environment that is generally supportive for assets. So Mike Wilson was one of the people that really switched me on to this idea that actually it was more than a pullback that we saw on the back end of Trump's tariffs. It was actually a bear market, and now a new bull is ready to take hold. An interesting chart I want to share with you that potentially signals the kind of bullish market that we're in is the IWM versus the S&P 500. Now, if small cap stocks are going to do well, that's generally going to be a good environment for assets. Certainly a bullish one, because a bearish one would see the likes of the S&P 500, and we're dividing the IWM by the S&P 500 here, and we're expecting upside, meaning that small caps are going to outperform large caps. For that to happen, that's generally got to be a good risk environment. And we think that this chart very much solidifies that. This is a falling wedge. We do think this results in upside, which is only going to happen in a generally bullish environment, which, of course, given what the S&P 500 is telling us, we are indeed expecting. So historically, we have history on our side in regards to a good time for markets ahead of us. Certainly with the retracement of what is technically a bear market, we think a new bull is upon us. That's going to see crypto do well, and we have a number of sort of correlating charts that we can add to that. We also think the likes of Bitcoin dominance is now in a downtrend. Again, that's only going to happen in a generally good environment for assets. We could use the Bitcoin dominance chart really to give us a bullish narrative on the S&P 500. Markets are correlated because ultimately they are moved by similar things. Now, an interesting take we haven't really heard anybody make is that we've actually had the yield curve uninversion play out. The yield curve, and the yield curve that we're using, is the primary yield curve to be used, certainly the one that's looked at by traditional market analysts and is the preferred yield curve, is the 10-year versus the 2-year yields for the US government bonds. Every time this has gone inverted, meaning the 2-year yields are offering you a higher return than the 10-year yields, which doesn't make sense, right? You lock your money up for a longer period of time, you should get a greater reward. We're not going to go into fundamentally why this takes place. But every time you get that inversion, once an uninversion has taken place, it essentially starts down a timer in regards to some sort of a event causing the markets to sell off to take place. We had one back in originally 1989. This preceded the crash of the 90s. We had one that led into the dot-com crash. We had one that led into 2008. We had one that led into the March 2020 events, the 19 events, we'll put it. And we had one, I believe, that led into the Trump tariffs. I think the most recent yield curve uninversion, one of the only people, so far the only people I've seen saying this, signaled the Trump tariff pullback, the technical bear market that we've just seen. And what typically follows the yield curve uninversion, the event that takes place, is after that event that takes place that the yield curve uninversion signals, is a good time for the markets. Let's throw the SPX on here, which is the S&P 500. You can see yield curve uninversion. There's a period of time, in this case it was 364 days, a year, that took place for the crash of the 90s to take place. After that, the markets went on and did rather well after the event. If we look at the yield curve uninversion that preceded or prefaced the dot-com crash, it took 798 days. Then we had the dot-com crash, as you can see here on the charts. Once that crash was over, we then did go on and rally for a period of time. Similarly, we had a yield curve uninversion that led into the 2008 financial crisis. We actually had two of them. It went uninverted and then inverted, and then uninverted once more, ultimately to lead to 2008. We also had the March 2020, the 19 crash uninversion that led into the March 2020 crash. And I believe that the uninversion that's taken place on the back end of the most recent uninversion, we've actually had the Trump tariff sell-off as the event that this yield curve uninversion was signaling, which means that the event is now over. That catastrophe that people are expecting is now behind us. And ultimately, I think that clears the skies for markets ahead of us. And certainly given everything else that we've just looked at, and there's more things we could add to this, but we think these are solid enough to sort of portray a good time for markets ahead of us. We think it walks, talks, and quacks like a duck. And ultimately, to go back to the chart that I showed at the start, if markets generally, the US stock markets are going to do well, the NASDAQ, the S&P 500, if the S&P 500 is doing well, the NASDAQ will do well. Likely small caps like the IWM will do well, certainly in a flourishing bull market. Actually, crypto is also going to benefit from that, but outperform as a higher beta the traditional financial market. So I think it's very important as a crypto analyst, certainly a crypto technical analyst, to have an opinion or a technical thesis on the markets more broadly. And if you get that kind of green light, which we think we have in regard to the traditional markets, you can then analyze the crypto markets. If they are bullish, which we believe they are, whether that's looking at Bitcoin dominance, whether that's looking at the total market caps, whether that's looking at crypto ETPs, Bitcoin, individual altcoins, which are all bullish in my opinion when we assess the charts, then you can look at the fundamental story. And if you can piece them all together and it's giving you that bull, 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 when it walks, talks, and quacks like a duck, we call it a duck, and we think the crypto markets, based on what the traditional markets look like, are in for a pretty spectacular time. Ladies and gentlemen, I hope you don't mind me spending this daily market update in looking at the traditional markets, but we think it's important. It gives us confidence in regards to what we're expecting for the cryptocurrency space. That's it from me. Let me know your thoughts in the comment section, and I'll see you all in the next one.